How's it going, guys? This is Forensic Forex with Deontay, and I'm back in another video. This is episode 8 to the Asian Session Library, and we're going to talk about Tuesday's Asian Session model, which was successful. There is a little bit of confusion about why there wasn't a sell setup, but I'm going to explain that today. I'm going to talk about the buy setup that led you to over 20, 40, 50, 60 pips for UJ, and we're going to talk about how that played out. So first and foremost, we're going to mark off our zones. So we have midnight, 8 p.m., and 12 p.m. So from 12 p.m. to 8 p.m., that is your New York lunch session. And we know that's from 12 p.m. to 8 p.m. This is where you're not permitted to trade. It's a dead zone. I don't trade here. I leave this completely alone because normally I'm going to face consolidation. Here, however, I'm going to trade because it's Asian session open. It's a live zone. So this starts at 8 p.m., ends at 12 a.m., and it's a live zone. So trading is permitted here. So at this point, right prior to 8 p.m. open, I'm looking at this time period to gauge what side of liquidity I have to work with going into the Asian session. So generally, I'm going for the highest highs or swing lows or swing highs that I have. So just prior to 8 p.m. here at this price here, that's the high that we have. Let me get smaller. So that's a high point that we have. We have a swing low just below it. So we'll mark that off. We'll mark off all the swing lows here. This one as well. We're not marking this. Can we mark this one off? We can, but it's relatively equal. Let's see who's lower. It is lower. It is still unbroken, so we'll mark it off just because. And then we have this swing high here. So we have all our buy side and sell side liquidity. So the red lines are either a high or a swing high where buy side will reside. The blue is a swing low or a low where sell side reside. So going into the session, I'm not trying to expect whether or not it's going to run up or go down. I'm normally going in with a very non-biased idea. If it breaks the high, I want to find a short opportunity. If it breaks the low, I'm looking for a buy opportunity. That's really it. So you play it forward, you'll see that price does break a high, and after breaking high, it goes down. And we're going to talk about this towards the end of the video, but I'm just going to play out the setup for you guys. So then at this point, I go down to the 1 minute time frame, and I'm going to mark off the opening price to the Asian session. This is very crucial here. Many people are overlooking this step. 8 p.m. Asian open. Now we know anything above this price point is a premium, and anything below is going to be a discount. I'm going to really take my time with this one. So we got discount, make that 11, and then we got premium. Got our primo up here, premium. So high probability sell scenarios would unfold above the Asian Open, and high probability buy scenarios would unfold below the Asian Open. So this is overbought and this is oversold. You always want to be buying in an oversold condition. You always want to be selling in an overbought condition. That's just how it works. I don't make the rules, but it logically makes sense. You want to buy low and you want to sell high. It goes hand in hand. You can see how it runs the high here and then it sells off quickly. You can see there is a fair value gap here, but this fair value gap, I would ignore and negate the fact. And we'll talk about that a little later in the video. Price plays forward, and we're looking for a fair value gap to the upside. So we don't have any after breaking this swing low here, right? This is that 15-minute swing low, and we're looking for a fair value gap. Here we have one, very small. We'll zoom in, and we'll check that out. This is where the fair value gap is, here and here. At that point, I'm looking to go long here. It's really quick, long here, but I'm live. I'm sitting in front of my computer. I have my phone in front of me, and I'm going long here. As soon as price hits that, I'm going long, and I'm looking for something of 20 pips and 20 pips down. So we're just going to draw that out just so you guys can see it in ideal situation. So draw this up to 20 pips. Right here. And then we'll draw this down to 20 pips as well. So we're looking for a 1-to-1. Best case scenario, very minimalistic. Notice that all these setups are normally a 1-to-1, and the stop loss is going to be either 15 to 20 pips. And we're using a yen cross pair for the Asian session model. That doesn't mean, many people ask me, does that mean it doesn't work for this and it doesn't work for that? It can. Back test it. I may not know if it works for another asset class because I don't trade that asset class, but if you backtest it, it could. You just have to study it long enough to see if it's actually a feasible model. For the foreign exchange currency, I know for sure it's a feasible model. At that point, I let place play. And we can see our price is teeter-tottering and slowly making higher highs and higher swing lows. And this is right, I'm gonna pause it right at the Asian session close. So we can see we almost got 20 pips, still running up. You could have a trailing stop, or you can take partials at 15 pips, 10 pips, and then have a trailing stop below a swing low. But if you look at it overall in the context, where's the buy setup occurring? Below the Asian session opening price at a discount in an oversold condition. After that first fair value got formed, we were looking to go long with a 20 pip SL and a 20 pip TP. Now that could be a 15 pip TP and a 15 pip SL. All depends on what you're looking for. Generally, I think those two interchangeably work really well. But then we can see, even then so, it tends to blend with the higher time frame analysis. So if you're watching the daily updates that I'm doing for May, so currently in May, I'm tracking UJ, and I'm bullish on dollar. That means I'm bullish on UJ. You can see how the higher time frame blends into this model, and it continues to give you well over 20, 30, 40, 50, 60 pips. And you can see TP definitely smashed, but you know, overall, where UJ ended for the day, it was just very bullish today. And we saw a sell-off in foreign currencies. We saw a sell-off in gold. But notice this fair value gap, and this is where people are getting it wrong. This fair value gap formed in a discount. This fair value gap did not form in a premium after taking out this 15-minute swing high. I want to see this fair value gap clearly up and above 8 p.m. opening price for me to see price come back into it and then sell. This fair value gap, it's at fair value. And the bulk of it is actually in a discount. The bulk of it is not in a premium. This fair value gap, the speed down, most of it is below 8 p.m. I want to see most of the fair value gap either above 8 p.m. or more above the fair value of the line. You can see majority of this fair value gap is well below 8 p.m. Now, if you take a look at all the previous examples, where this is episode 7, where is that fair value gap forming? Below the 8 p.m. opening price. Let's look at episode, let's see what it is, episode 3. Where's this fair value gap forming? Below 8 p.m. opening price. I have oversold here and discount. You can see that. Oversold condition, buy. Episode 1. Where's the fair value gap forming? Below the 8 p.m. opening price, discount. Look at the buy setup. Let's do episode 5. I just click random ones and open it up. You can see episode 5. Where's this fair value gap forming? Well below 8 p.m. opening price. And let's take a look at where this fair value gap today formed. Below discount. But this one did not. After taking out that 15-minute swing high, we did not get a fair value gap in a premium for the sell opportunity there. So that's the difference here. So many people were confused about why there was not a sell setup there. Instead, there was a buy setup. So hopefully this clarifies any confusion. Peace.